Hello and welcome. Time for another quick update. It's the 21st day of June 2019. Why another update? Just because I feel like it. And I was just reminiscing on days and years past, so I'm going to go over that as well. All bets, trades of the like, although I'm really not going to go over much. It's within each his own risk and their own reward. In fact, I'm just continuing on with before the video that I was doing and just talk about what markets do. I mean, Fibonacci. Okay, we had a break above this, convincing move to this level, straight up to that point. I'm hitting three times and then pulling back, not quite to where it came from, but well, yes, to where it came from, but not to Fibonacci. This was actually a failed breakdown. Oftentimes for failed moves in not one direction can be a fast move in the opposite direction. Check mark, because the failed breakdown is here. And the fast move, of course, is that move that went higher, went past term. And when looking at this, do you see any 18 strength in here that's telling you that the move beforehand was going to happen? Yeah, I mean, it just has to happen to work out that way. And what occurs afterwards is a fast move. It's somewhat close to this line, and we'll talk about that line soon, but you probably know what it already is. Or that's an exact number too. This one is close, but anyway, it has a fast move into here, and then we have this little bit of a consolidation. It takes some time to get back to where it came from. Didn't take long at all to get to this high, but it did take a lot longer to get back to it. And then it had a nice little move past and piercing above that level of resistance that I got drawn in at an exact number of $9,841.56. That's 76.4% from this high to this low. You see a level of resistance in here. Yeah, it's going to go up. Where's it going to go to? Probably a little above 98.41 and 56 cents, and that's exactly what it did. It hit it there on two different occasions, and then of course now we can see it's reversed the trend. We have resistance here in the 18, and I say, okay, so if we see weakness amongst the 18 average of lows and different, where are the times that we see that? Well, the answer was right in here. This period was that pause period, and as this was breaking down, that's what gave it away. And sure enough, it broke down, albeit barely, to that previous level of support. Now we have this move come up to the 18, and we're already leaving it. It's not holding anywhere near. In fact, it's already making a new low. So we're probably at least going to head down a little bit, even more. But this is all like 1 minute, short-term stuff, all that kind of jazz, yada, yada, yada. I got nothing really more else important to say about these live markets, unless maybe just the live fact. Oh, there it goes down. Oh, surprise, surprise. And for all those people that say technical analysis doesn't work, I mean, come on. Learn how. I mean, it's not. I'm not gonna say learn how. That's not the way I said it. It's an art. You have to understand it. It's almost like people saying using your hand or whatever, using physical labor to build a house doesn't work. Why? Because I don't know how to build a house. Yeah, well, the ones that do know how to do it do. I mean, no surprise that this happens. It's like over and over and over and constant. Because I use the 18 average. I could tell in here, as I was saying, just as it was happening, oh, we're now starting to go down, breaking below up to the resistance here. Lower low. Okay, and that's a pretty good leg as it is. How much further can we go? Well, still a little bit towards there. We have re-entered the neutrality stage. This thing could even go as deep as into here. Now it's a matching little pierce above here. And it's all whatever, just short term, yada, yada, yada stuff. Just for something to do, I decided to do a YouTube search for Silver Charts 2011, and this is what came up. Number one was 7 years ago, 1,463 views, and I haven't done anything with. I mean, I have that blog spot link from below. No, just way back when. But this chart is something that I created this. It's made via a spreadsheet over 7 years ago. In 2011, well, October 28th, I made it. And what do I have on here? Well, I have this blue 18 average. Now, I had little dots in between to indicate the 18 average of close, but I got to know in time, like, what's the real point of having those in between? I pretty much know where they are. It really is that a bandish that it has that I'm looking at. And then these lines, they're Fibonacci lines, like always, and exponential Fibonacci lines at that. And then these green, these other lines here that were to resemble really the whole Bollinger Bands, because I really thought Bollinger Bands sucked, as in they're way, way, way too conservative to saying where overbought conditions were, as is the case in here when this hit the Bollinger Band here. But for me, I don't even need to see this. When I know it's well extended from the 18, I know it's well extended from the 18. That's just how it goes. So to me, the less symbols you have, the easier it is. Almost a KISS, keep it simple, stupid, as I learned in the 1980s and 90s was a common phase. But I don't. I only need the indicators that I need: the 18 average and the Fibonacci lines. Any other reasons I need to put a horizontal ray in. Uptrend and downtrend lines at times can work out good as well too. But once you put like 20 different things, 9 different moving averages, it just becomes. I just can't look at it and understand it. Especially because I like to look at individual candles here and there. See, but before I did 150 periods, and I reduced it to 100 because it was just too many even to look at. And that's why I like doing this style here, because I can adjust it as need be. And 1 minute update here as we're going on. Now, big resistance test. You have a decent move from that level that we've seen. Now you have this great rally because you didn't resist the lows. So that's the first upgrade. It's a bit better to have a move to the 18. Now a test and resisting the 18 highs. Is it going to do it? I don't know yet. I mean, it's fighting pretty good and going above it. But regardless of the fact, it's now had a good enough move where I need to see this hold, the higher low area, all that type of stuff. I can go below the 18 lows, but I need to see it hold and stay above it. Meaning, any break below it, that's where it has to be, the low. I mean, one move below it, and that's it. Okay, so back to this again here. And we'll end the video because it's just going to be a quickie. For me, anyway. Yeah, so that was fun to do. If you want to check some of these videos, I'll put a comment on there. I think a lot of them are there's a couple that I think are pretty good. This is, I don't know. I haven't watched this in like forever. I probably only watched the first few seconds of it just to make sure the sound worked, and that was it. That's what I do with 98% of my videos. December 15th, 2011. Just another one in here. The Silver Log, April 15th, 2011. This would have been right before the top. Oh, those are some interesting levels, and they're still playing out today. Oh, well, I mean, it's not like much is changing. And these are actually not, and this is funny because as much as I diss and talk bad about linear Fibonacci, this method of linear Fibonacci, which is my old school way of learning it, it's a different upside level. But these lines in here have had good track records before. I'm trying to remember what these numbers are. $20 is one. I mean, oh man, these were some pretty good charts. I'm pretty good at making charts. And all these moving averages, I mean, they're in the same sequence. You can see them together. You get the idea of what they're doing here. But the Fibonacci, what else do we have for charts? There's just different trend lines. This was like the big trend line. It never did break it, but breaking that was like this was like the like only SHIT. This is gonna go like really really big kind of deal. What's this chart? Direction. Oh, I remember doing this. Direction. I should do this again. Direction from the 50-day low. Direction from the 50-day high. Okay, I should do that again. That was fun to do back then. I mean, this is the creative things that I would think about. Wow, this is bringing me back memories. What else do we got on here? I mean, I know I got that one, the Fibonacci. That's the granddaddy of them all. Is the Fibonacci upside one. This one here. Okay, $48.36. 34.41. $20 an hour. I mean, how is 14.47 played since then? I mean, come on. This is just sick how these numbers work. This is just sick. This is a good video, probably. It's 20 minutes. It's kind of long. What else do we got? I talk a lot. I mean, it. I talk about this at the 10-minute mark. I go on, and here's another part of trend line analysis here. Different trend lines here, how it was breaking. But these are key numbers. And the upper numbers I'm probably going to explain how to get in this video. And let's put the silver chart up as well. I didn't plan on doing this for the video. And before I want to go back to a few other ones. But okay, what I do is I take a key level, which is $8 and $4 in the range. This is on the bottom right. This was a long level for like the entire 1980s and 1990s of a major level of support and resistance. So what I do is I take what I do in a market is I take a market that gets its ass kicked going down, and then I'm looking for something to have a consolidation pattern like this, and I should even look for this for things like Bitcoin, just for something to do. Because I don't think like this as much like I did back then. To say I got a creative way of thinking, at least my old self does, and my new self does as well too. Or my current self, I should say. And yeah, so let's take a look at this on the silver chart. But before we do that, I want to just take a look at some of these other videos. June 9, 2011, there's nothing bullish with the silver chart, question mark, well, right, I guess. 9/25/2011, September 25th, 2011, gold chart since 1932, and the gold to silver ratio since 1968. Average yearly chart in here, and then now we go to Alexis Com 1, Assassin, US dollar silver gold ratio. Assassin, I don't even know. Silver chart analysis. 3 silver charts I rely on the most. I don't know what those 3 are, but back then I relied on them. Silver, this is March 14th. Oh, nice little like wedge there pattern on December 12th, 2011. And then Informed Trades has stuff too, but I own the first page of Silver Charts 2011 search. Nice little quick update with Bitcoin. Wow, sweet, sweet deal. Okay. Go, Bitcoin, go. It's like a sports game. I mean, I can't control this event, but I can cheer for it. I can trade it as I wish, but I mean, we got a long ways to go still to the 10.6, 10.7 number. That's the conservative level I expect it to go to. But let's go to silver. And let's draw those numbers in. I mean, this is information I gave in 2011, so let's bring us back to 2011. And $48. I mean, 48.32, 2094, 14. And ballpark is fine. It doesn't have to be the exact. I got 40. That was, oh my goodness, how lucky is that? And I literally mean that one. I literally do mean that one. Because I'm sarcastic in Fibonacci when I say, oh, how lucky was it that it hits? And how lucky is it when $14 becomes key? Okay, let's continue on. So 31.41. So moving forward, 31.41, don't be surprised if it happens to be relatively decently big. We can see that this case it pierced above. That'll be close enough. Let's go next to 2094. And then 14 change, which is 14.5, 10.5. All right. And, well, let's see, how is 31 played? Yeah, it pierced above it originally. And then it congested it. And then 20, we had very moderate time. I mean, barely any support on May 20th week. It held and stayed above it, but it pierced below it. Consolidating near it. Resisting it on many occasions. And bottoming pretty much exactly at it. And then again at it. I mean, it's just luck that these Fibonacci numbers, and then again it comes in and resists it. It's just luck. And then it comes down here again. It's just luck. Okay? It's just luck. Don't think that it's just always going to play out. And that's just how it's going to be. It's just luck. Thank you for tuning in. Have yourself a great day. Bye bye.